Kick things off here, just a few common disclosures. Arnabox is not a law firm, CPA firm, or registered investment advisor firm. None of the information presented, advice given, or services rendered should be considered legal, tax, accounting, or investment advice. And of course, if you require the services of an attorney, we recommend that you seek out an independent attorney and verify their securities law experience. So high level, just to kind of set the background here a little bit of what we're talking about. There are two filing systems we're going to touch upon on this slide here. There's the IRAD system and the EDGAR filing system. The IRAD system, which stands for the Investment Advisor Registration Depository, is the primary regulatory filing system for all RIA firms, whether you register at the state level or at the federal level with the SEC. And the types of filings that are done on the IRAD system are ones you're probably all familiar with that we assist you with today. It's your Form 80V Part 1, the Form 80V Part 2A, which is kind of your narrative brochure for your firm, any Form 80V Part 2Bs that need to be posted for state-registered firms, which are more the individual brochures for your representatives of your firm. The new Form 80V Part 3, which was just announced a few weeks back, which will be impacting a number of SEC-registered firms beginning next year. That's also going to be filed through the IRAD system. The Form PF, which impacts those of you that manage private funds at a certain size, that's also done through the IRAD system. And then also along that same way, you see the Form U4, which is kind of the individual registration filing that's done through the system as well. So that is all actually administered by FINRA. So while FINRA does not regulate RIA firms, as you know, they do kind of administer that system in the background and help facilitate that on behalf of the states and the SEC. Now, today is a bit different. We're going to be talking about the 13F filing primarily, and that's actually done through an entirely different filing system, which is administered by the SEC, and that is the EDGAR filing system, which stands for Electronic Data Gathering, Analysis, and Retrieval. EDGAR is the main filing system the SEC uses across really all their different divisions. It's actually not directly utilized by RIA firms very much, but it does impact RIA firms for this particular type of filing. You're probably familiar with EDGAR more from a public company standpoint. This is where a company may file its initial, S1 or IPO filing. This is where public companies file their Form 10Ks or 10Qs. This is where individual executives or large shareholders of a company will file their individual Forms 3, 4s, and 5s. Also Schedule 13D filings, which we'll touch upon in a minute here. And then also, of course, today's topic, the Schedule 13F filing is actually administered through EDGAR. And why this is relevant is that it's an entirely different system. You need a whole different username, password, login, etc. They each operate completely independently. That's the IRAD system is operated completely independently from the EDGAR filing system. Now, a couple things just to be familiar with, just talking about these Section 13 and 16 EDGAR filings. The most common kind of Section 13 or Section 16 filing that impacts RIA firms, so it's not the only one, but the most common one is the Section 13F filing, which we're focusing today's webinar on. And this requires advisors to file Form 13F if the firm exercises an investment discretion with respect to $100 million or more in certain identified 13F securities. The Form 13F usually has to be filed within 45 days of the end of the quarter. There are a few other types of filings which impact RIA firms from time to time as well. Particularly, I'd highlight the Section 13D if the firm is a beneficial owner of more than 5% of a publicly traded equity security. Sometimes the 13H will impact some larger firms as well, and that's essentially that we call it the large trader filing, where if you are trading, I believe that the threshold here is 2 million shares or 20 million in a day. $20 million of value in a day, or if you trade 20 million shares or 200 million of value during any calendar month, you're going to need to file a Form 13H. There's also the Section 16 filings, which don't impact RIA firms as much. It's more tied towards directors, officers, and shareholders of public companies. The thing that tricks up a lot of people for Section 13F, and often people don't recognize that they may need to file this as an RIA firm, is it includes equity securities that trade on exchanges, such as the NASDAQ national market system, but also includes equity options, warrants, shares of closed-end investment companies, certain convertible debt securities. It generally does not include open-end investment companies, so that $100 million will not count towards mutual funds, generally speaking, but often it does include many exchange-traded funds. So what trips up a lot of RIA firms is they don't necessarily own individual securities. So maybe you don't own Google or General Electric, you own hundreds of millions of dollars of exchange traded fund securities, how you manage your clients' portfolios. Often those will still qualify though as a 13F eligible security. So you still need to be filing a 13F, even if you're maybe not necessarily owning single company securities. So as I mentioned before, the Section 13F of the Securities Exchange Act requires an institutional investment manager to file a Form 13F if the firm exercises investment discretion with respect to $100 million or more in certain identified 13F securities. It is really important to note that many advisory firms meet the definition of a quote-unquote institutional investment manager. The SEC has a Form 13F FAQ guide, which you can Google kind of SEC 13F Form FAQs for Form 13F. It's a litany of some great kind of FAQs in there. But one of these they address is kind of what is or who is an institutional investment manager. And they do highlight, for example, an investment advisor that manages private accounts, mutual fund assets, or pension plan assets is an institutional investment manager. The FAQ guide also clarifies what investment discretion means in the eyes of the SEC. And they note here that investment discretion means the manager has the power to determine which securities are bought or sold for the accounts under management, which is kind of common kind of discretion as we think about in the RIA world, or the manager makes decisions about which securities are bought or sold for the accounts, even though someone else is responsible for the overall investment decisions. The next question for an investment advisory firm to think about is say you are a large firm, you have over 100 million securities that you manage. You do qualify as an institutional investment manager because you do exercise discretion over those assets. Then the question is figuring out, of those 100 million or more securities that you manage as a firm with discretion, are those quote-unquote 13F eligible securities? The list of 13F securities is quite extensive, and as I mentioned before, actually includes many exchange-traded funds that are commonly utilized by RIA firms. And in particular, I would point you to there's a in the red box at the bottom of the slide, the SEC publishes really a regularly updated list of Section 13F securities that's available on their website. You always can go to that website. You can really use your Control F function on your browser. You can search different CUSIPs or ticker symbols. And you can kind of check, particularly around ETFs, to see if some of those are probably qualifying as 13F securities. Now, more tactically, for those of you who have not filed a 13F before, I recognize many of you have before on this webinar, for those that haven't, I want to walk through kind of the timing related to 13F filings when you're first required to file them. Generally, the rule requires a firm to file the 13F when during the past calendar year, so basically let's take 2019 as an example. If at any point in 2019, if you for the first time cross over this $100 million threshold of 13F securities, you don't immediately need to file your initial Form 13F, but you're required within 45 days after the last day of the calendar year, so within 45 days of the end of 2019, you would need to file your firm's first Form 13F. So as an example, let's assume an RIA firm first reaches 100 million in eligible securities on June 30th of this year. So that's just what happened a few weeks back. You'd be required to file your firm's first Form 13F filing by February 14th, 2020, which is 45 days after the end of this year. Now, once you submit that annual filing, kind of your first filing, which would come in February of 2020, you're then going to be required to file quarterly filings going forward. So each quarterly filing is going to be due 45 days after the end of the calendar quarter. So it's not just an annual filing. While you're kind of have a bit of a grace period to file your first 13F filing, then going forward, you're going to need to make quarterly filings within 45 days after the end of each quarter. So after March 31st, June 30th, September 30th, et cetera. We're approaching the next deadline for the quarter Q2 of 2019 filing, which is the official kind of filing deadline is August 15th to file your quarterly filing for 13F securities.